To Mr. Kony, Vice President, Head of Marketing and Business Development at FMDQ OTC Securities Exchange. Quite a mouthful. And she was just talking about those 3 boxes, the achievements in the first half of 2016. Continue. So, sorry, we apologize for that little poor audio quality. We need to fix it and come back. Please go ahead.
So as I was talking about under market development, so we have we launched our dealing member specialist or activated dealing member specialist group of dealing members, where we have the non-bank financial institutions trading the fixed income market, and this is to help improve liquidity in the market to start with. Then also we had, when we look at governance, we have there's a new sort of governance in the commercial papers market from the directive by the CBN a couple of weeks ago, sort of mandating that commercial papers should be quoted on authorized exchanges. And that is obviously to help improve the integrity of that market. And that helps the debt market as a whole in Nigeria, with improved transparency, integrity, and obviously improving investor confidence off the back of that. Then under stakeholder engagement, there were quite a few things that we did in stakeholder engagement. We had an agreement that we went into with the National Pension Commission, where that would also help improve the integrity of the pension industry in the market. And also there was the stakeholder engagement for corporates off the back of the new FX futures market. And that's one of the things that we're sort of focusing on majorly. And yes, we talk about the half of the year, but what happened is, and as you started talking about, from June, from June through to July.
Yes, the FX market is what
it's pretty much
millions
what
of Nigerians will
remember
the most, would want to talk about, not just remember, but it's a serious milestone. So let's talk more about that.
Yes.
Look at January to June 2016 to bank FX market date numbers.
Okay, so the turnover generally from January to June was, when you compare to last year, it was about, say, 30% decline year on year. So we had a turnover of about 50 trillion compared to 70 trillion last year. But again, because of the FX market and the lack of a lot of activity in that market, that made us see that. But then we saw activity in the other sort of product lines. And when you go specifically to FX, the decline was about 50%. So when you compare January to June this year to last year, it was a 50% decline. The market had been sort of stunted for about 15 months. So when it's opened up, you'd expect there to sort of be like a gradual sort of progression towards obviously improved liquidity, in the improved market. So you wouldn't expect to see like complete turnaround in just a few weeks.
But that was the expectation. That was the expectations on the street.
Well, it was the expectation on the street because that's probably what everyone wanted. But again, when you had a market that was shut down, well, almost shut down for 15 months, and that's been opened up again, before you can go back to what it was.
To normalcy.
Normalcy.
Kind of.
Because apart from what the market expected, those actually trading in that market needed to be cautious. And apart from those trading in the market, even the central bank also had to put things in place to ensure that the market opens up and makes the right progression. Because, again, there was the fact to look at the rates. There was the fact that there was unfulfilled demand over a long stretch. So that's why the central bank sort of brought the initiative to actually clear that unfulfilled demand before actually opening up the market. When you have a market that is unidirectional, and you just open it up and say, start trading, say, two-way, what's going to happen is everyone is just going to obviously want to fulfill that demand, and you see your rates just hike astronomically. So that's why sort of things were put in place. And so with that, there was also the futures contracts that came out as well to help address quite a number of things, and in general help improve the attractiveness of the market. Because with the market that was sort of lulled, what you found was flows sort of going out of the market, and that added a lot of pressure in the market with lack of supply, and obviously that increased.
So in other words, we've dealt more of we were dealing with outflows still a lot more than supplies coming in because of the pent-up demand at the marketplace, and that will naturally impact on the price of the particular product.
Yes.
Now, how have you been able to manage the authorized dealers? What regulations have you put in place? What steps you've taken in the last couple of weeks to make sure that everybody do what they ought to do and they're doing them right?
Okay, so even from
kind of managing the system, let me put it that
well, even from the onset, FMDQ has its trading rules, the market standards, the trading standards, and obviously, when the market was opened up again to start trading, there were revised sort of guidelines brought out again to the market. Now, it's not so much necessarily managing, because our dealing members obviously are being governed by our rules and regulations across that market, and it was not necessarily anything major or even stressful in any way. It was just bringing out rules to be able to fit the progression of that market. But then saying that, we also had to bring out operational standards and the framework for the OTC futures, because again, this is a new product.
Yeah, talk to us about this FX futures market looks like. Yeah, spot market, many Nigerians seem to they've got a hang of what the spot market looks like. But when it comes to the OTC FX futures?
So OTC FX futures, it's a hedging tool. And with what happened in the FX markets, what you found was people needed a hedging product to be able to hedge themselves against, especially the FX rates risk. So the futures, what does it do? It helps you manage that risk. So it helps you decide and know ahead of time what rate it is you're going to get into any FX transaction, whether it's for you to buy or to sell FX. And that's it really in a nutshell. But apart from that, again, there was a strategy behind it, because whilst this would also help for business planning, for even public finance planning, it also helps the market in the sense that the market starts to look a bit more attractive when you combine, what is happening in the FX, what is happening also in the yields for the fixed income. So that helps your market more attractive. It helps you. People now are willing or now want to come and play in that market. And when you have all of that working together, the pressure eases in the market and activity sort of starts to happen, and you find yourself having even hopefully better rates or an appreciation of them.
Half year down the line, talk to us about the outlook for the second half.
Well, again, so the futures markets, the FX markets just opened up. Futures markets, the futures products have just started. This is still the beginning, early stages. What we expect and what we've also found from feedback and what we've been hearing from the market is activity in that market beginning to improve. We're expecting to have more inflows into the market. We're expecting people to participate more in the market, and we're expecting to see rates stabilize over time. And apart from that, even what the CBN is doing with regards to even helping that, reforming the FX market and, moving flows to the BDC market, what we'll find, what we would expect to see is rates being more stabilized in that market, the demand pressure being eased, supply into that market, supply also coming even into the spot FX markets. And what we expect is more activity and hopefully in a few short months going back to what the market used to be about a year and a half ago.
That was a very nice way of putting it. Landed. Thank you.
Thank you very much.
Tumi Sekone, we thank you very much.
Vice
President and Head of Marketing and Business Development at FMDQ, OTC Securities Exchange.